What is UP? Traders, welcome back to the channel. If you're just joining us, you picked the perfect day to tune in because we witnessed absolute chaos in the market today. And I'm not exaggerating. We're talking triple-digit percentage gainers. 500 million shares changing hands. And some absolutely wild moves that you need to understand right now. By the end of this video, you'll know exactly which stocks crushed it today, why they moved the way they did, and what red flags we're seeing on the loser side. Stick around. This is going to be a breakdown you do not want to miss. Alright, let's set the stage for June 22nd, 2026. Today was an interesting day in the markets. We're seeing a massive divergence between mega gainers and some serious sell-offs. What we're looking at here is a market where catalysts are king. We've got corporate announcements, partnership news, and some major restructuring events driving stock movement. The volume we're seeing across the board is absolutely elevated. We're talking 2.0x relative volume on multiple tickers, which tells us retail and institutional investors are paying close attention. This is not a normal day of trading. This is the kind of day that separates the traders who did their homework from the ones who got caught off guard. Let's dive into the gainers first. Number 1 with the most insane move of the day. $EHGO. Up 106.7%. We're literally talking about a stock that doubled in a single trading session. Trading at $3.72 with absolutely massive volume. 232 million shares. That's 2.0x relative volume. Here's what happened. EHGO announced a 1-for-16 share consolidation. Now, consolidations can go either way. But what we're seeing here is a stock that was trading at penny stock levels getting a street. That carried momentum all day long. Number 2. NXTS. Up 91.7% at $9.74. Volume of 121 million shares at 2.0x relative. NXTS Technologies. They announced that their subsidiary MitoCare X Bio is entering a research partnership. And they announced an international AI drug discovery initiative. This is huge for a biotech play. We're talking about dual catalysts, subsidiary news plus major AI integration into their drug discovery pipeline. The fundamental business expansion. Number 3. GETY. Getty Images. Up 91.7% at $1.16. And folks, THIS is the story that's been everywhere. Getty Images signed a licensing deal with OpenAI. This is massive because it validates Getty's content for AI training, creates a new revenue stream, and positions Getty as essential infrastructure in the AI economy. We saw pre-market action of up 200% initially, and it's settling around 91.7% as of market. Institutional grade buying pressure. Number 4. VTAK. Up 63.1% at $1.37. Volume 13.7 million shares at 1.9x relative. We've got Catheter Precision filing a prospectus for 68 million common shares. This is a dilutive offering announcement, which typically crushes a stock. But we're seeing the opposite here. Flight is partnering with GSE Worldwide and PGA Tour professionals. They're activating high-frequency activity. There's business momentum this move despite the dilution. Number 5. SKYQ. Up 61.5% at $1.89. Volume 436 million shares at 2.0x relative volume. SKYQ entered the production phase at Nevada's only refinery. This is a game changer. Production phase announcements are critical for mining and refining plays because they validate the entire thesis. We've gone from exploration, development to actually extracting and refining materials. That's a massive de-risking EVs. Talk about the pain side of today. Number 1. AIXI. Down 51.1% at $3.06. SKYQ Corporation took a massive hit after the Shanghai High People's Court announcement. And based on the SEC filings, this involves a material definitive agreement. This suggests litigation, restructuring, or some kind of legal decision that's fundamentally negative for the company. A 51% single-day drop means institutional investors are getting out. This is not a die. TA dip to buy. This is a red flag. Number 2. SDOT. Down 50.6% at $8.00. Volume only 1.6 million shares. This is super interesting because we're seeing an SEC 8K filing for entry into a material definitive agreement. When you see simultaneous 8K filings and a 50% drop, you're looking at something material. Could be a down round. Could be a forced merger at bad terms. Could be debt restructuring. Low volume on the way down is actually more paralyzed or have already bailed. Number 3. LICN. Down 43.8% at $1.22. Volume 771K shares. LICN International Limited announced financial results. This is likely an earnings miss or guidance cut. We're talking about China-based operations. So there's also geopolitical and regulatory risk baked in here. Number 4. SPCH. Down 33.2% at $12.68. Volume 108 million shares. This is a leveraged ETF. 2x long SpaceX. Here's the thing with LEV and regulatory risk baked in here. Number 4. SPCH. Down 33.2% at $12.68. Volume 108 million shares. This is a leveraged ETF. 2x long SpaceX. Here's the thing with leveraged ETFs. They decay over time due to how they're structured. Leveraged shares launch 2x long and 2x short versions of the same underlying exposure, which means they're hedging against each other. When you see these kind of paired launches, it signals the underlying asset. Not necessarily SpaceX specific. Number 5. SMCZ. Down 33.0% at $6.31. Volume 10.2 million shares. This is also a leveraged ETF. A 2x leveraged play on supermicro computer stock. The comparison here is SMCZ versus SMCX. Essentially betting against versus betting all in on supermicro. A 33% drop in a leveraged position is significant, suggesting the underlying supermicro stock is under pressure. Possible reasons: earnings misses, guidance. Here's what I'm watching for tomorrow. First, $GETY. This Getty Images OpenAI deal is fresh. We could see continued institutional accumulation, or profit taking. Watch the $1.16 level as support. If it holds above $1.10, we could see another leg higher. If it breaks below $1.00, that tells you insiders are selling. Second, EHGO and NXTS consolidation. These are 90% plus gainers that moved on catalysts. Tomorrow, we need to see if this is sustained buying or one-day euphoria. Volume below 1.5x relative volume would be a red flag. Third, the losers. specifically $AIXI and $SDOT. These are names to avoid until more clarity emerges. The SEC filings are still fresh, and we don't have full information on what these material definitive agreements entail. Wait for conference calls or investor presentations. Fourth, watch for analyst upgrades or downgrades on the gainers. When a stock moves 90% plus in a day, analysts scramble to issue reports. Those reports will set the tone for week-ahead trading. Fifth, keep an eye on relative volume. If tomorrow's volume is half of today's, that's a sign of cool down. If volume sustains or accelerates, that's institutional money coming in. And these moves could have legs. Every single day after market close, we break down the top gainers and losers so you never miss a major move. The markets move fast, but with our recaps, you're always informed. Subscribe to this channel and hit that bell icon so you get notified the moment we publish our next video. Tomorrow we'll be covering a brand new set of movers. I guarantee it'll be just as interesting as today. Don't miss it. See you tomorrow. If you want deeper analysis, real-time alerts, and a community of traders who are serious about understanding market catalysts and price action, head over to tdvw.com. That's tdvw.com. We've got premium research, daily market recaps, and educational content that'll level up your trading game. Link in the description. Thanks for watching, and we'll see you in tomorrow's recap.